Well, welcome to our Tactical Tuesday. There we go. I think we're here. Welcome to our Tactical Tuesday tonight, guys. Great to have you here tonight. We're talking about a topic that we all want, we're all looking for, and that is having success. And especially tonight, we're focusing on having success in real estate investment. And we're knocking it down to 7 key points that we've noticed over the last 20 plus years of being real estate investors, being in this world of real estate investment. What has made some people successful versus others who have not been? And that's what we're going to talk about tonight. 7 key points. And some of these guys you may have heard before, but I think some of them you may not have heard before. So stay tuned. We're going to get into it. It's going to be a lot of fun. Here we go. Let's get right into it, guys. 7 keys to success. And you know what? Before we start listing some of our top 7, I'd love to see, what do you think? Throw it in the chat and let us know, what do you think is a key to a successful real estate investor versus one that is maybe struggling, or maybe has to quit early, or maybe is not quite doing it right, maybe hitting roadblocks and not getting past them. I'd love to see a little bit of a list from you guys before I hit into my top 7. So throw it in the chat if you can. And before we get into that, I'll just say hi to everybody that's here. So hi, Tammy, Sean, and Andrea. Just say hi as you come on, guys, from all across. Let us know where you're from too. Eric from Westport, Ontario, Oshawa. So Sean and Andrea, there's our first one. Understand the numbers. That is a key to success. Absolutely. Something that we as real estate investors need to know, especially if for our own investments, but especially if we're having other people invest in our projects. We have to understand the numbers. We have to be able to answer all of those types of questions that have to do with the numbers, right? Francis from Vancouver, welcome. Tammy from Port Alberni, awesome. All the way on the island there. Love that area. Angie from YXE, that is Saskatoon for those of you that don't know. Okay, guys, we're going to jump right into it. 7 keys to success. Number 1 on our list, and you've heard me say this before, but I've had a few conversations with newcomer real estate entrepreneurs, real estate investors that are wanting to get into this world. And, they might have a little bit of cash that they're looking to invest somewhere. They don't quite know where they want to invest it or what they want to do with it. And one of the first things that I usually stress with people that are first getting started is, number 1, you need to invest in yourself. Now, you've heard that before, and it can mean many different things, investing in yourself, right? But when we focus in on our real estate world, our real estate investing world, what does it mean to invest in yourself? Well, obviously, you need to educate yourself. You need to understand the numbers. For example, what Sean and Andrea said here in the chat, you need to understand that stuff. So how do you get to understand that stuff? Well, you need to learn it. You need to educate yourself. Sometimes investing in yourself means, maybe buying books, reading them, it's spending time. It's not always just money. Maybe it's the time that it takes to educate yourself, taking courses, learning how the numbers work, understanding the terms that we use in the real estate investment world. For example, what is a cap rate? What is an NOI? What is an ROI? What are all of these different acronyms that we use all the time? Because if we're talking to other investors, we're maybe talking to sellers, buyers, whatever the case might be, even our realtors or mortgage brokers, we might need to know some of these terms. And so understanding the numbers, educating ourselves, learning the lingo, this is all involved in our first main point that we're sharing tonight, and that is to invest in yourself. And one of the things that, a lot of people getting started in this are a little afraid to do is, I have maybe, let's say I have $20,000 or $50,000 and I want to get going. Well, how am I going to spend that money wisely? Does it make sense to spend 5,000 or 10,000 or 20,000 of that on myself? That's learning and educating, so that then the remainder of the money, the 30,000 I might have left over, I can then invest properly. Does that make sense? And then maybe some of the strategies that I learned by spending that 10, 15, $20,000 on myself, I now find out ways where I can attract capital, where I can raise capital from others, where I can scale a business, where I can buy 10, 15, 20, 100 properties if I want to, because now I'm following a system. You see the difference between maybe taking that 50,000 and being able to buy one small property, maybe somewhere here in Canada, or the value of maybe learning better strategies so that we can then expand our business and make it as little or as large as we want. This all ties in with point number 1, investing in ourselves. Let me know what you guys think about this. Am I on the right track? For those of you that are investors, have been around a little while, what do you think about what I'm talking about right now? Hello, Robin and Washington from Ottawa, Craig and Lisa from Edmonton, Helen, nice to have you guys here. So that's point number 1. Invest in yourself, educate yourself on certain strategies, what works, understanding numbers, etc. Point number 2, and again, something you guys have heard me say before, but it's so important, especially when you're first starting out, is to build a team of support. You need a team around you. Now, who are the most important members of that team that you want to build around you? Number 1, and I might be a little biased because I was this at one point, but number 1, I will say the most important member of your team is probably your realtor. Now, there might be a toss-up between your realtor and your mortgage broker, but usually your realtor can find you a good mortgage broker. Or you can have a great mortgage broker from here, which can help find you your realtor. So those are kind of intertwined, those two there. Of course, we have 2 really good mortgage brokers that we recommend here in Fearless, and that is Sean Impey, who takes care of Western Canada, and Keith Youth is our realtor that takes care of our clients in Eastern Canada. And so 2 really good places to start. Depending on where you're investing, you then need to have a realtor. You need to then have a lawyer in that province, and you need to have an accountant that understands what you're doing. And just a little side off to that is a bookkeeper comes in really, really handy too, to keep everything straight. And sometimes we get scared to, again, spend money on this kind of stuff. But in the end, it saves us money. It saves us so much time. It saves us so much clutter in our head that if we have the right people on our team, we've built that team around us. And it doesn't mean we have to sign off that this is now my realtor and this is now my mortgage broker and this is now my lawyer and I have to hire them, etc. Doesn't necessarily mean that. But when we do have, or when we are going to look to do something, do we have that team around us that we can then rely on, that are going to bring us the options we're looking for? Whether that's properties, whether that's mortgage products, whether that's advice, we need to have a strong team around us. Casey says $20 saved me thousands. Was that a book, Casey? Interesting. Because that's the thing. When we educate ourselves, when we learn a little bit, and sometimes it doesn't cost very, very much money, right? We learn a slight little tweak to what maybe we've been doing. I know there's been instances many times before where you just get a word of advice from somebody, and yes, it ends up saving you thousands of dollars because you were going to do it a different way in the first place. And now you're doing it slightly different. Maybe you're getting it done quicker. Whatever the case is, I'll give you an example. 1 month less of vacancy because you're using the right tactics to fill a vacancy, can be thousands of dollars. But sometimes it's a little tweak that maybe costs $20 to find out because you read a book, or maybe it takes an hour of listening to a property management online course. Educating ourselves, investing in ourselves. But tied in with that is our team of support. So that was point number 2, is building a team of support. Realtor, mortgage broker, lawyer, accountant, and our bookkeeper. Those are very, very important people to have on our team. Okay, Casey says yes, a book. What book was it, Casey? I'm curious. Throw it in the chat. The book for me got us all started 20 plus years ago was Rich Dad, Poor Dad. And that was, it kind of just changed my whole mindset. And our whole outlook on what we were doing business wise for us. Hello, Corey from YYC. Look at that. Okay. Casey says Burr. Okay, so must be a good book. There you go. There's a good recommendation guide. I started with Rich Dad Poor Dad as well. There you go. Lots of people have. Thanks, Jules, for sharing the links. So Keith and Sean, those are our two mortgage brokers, guys. So if you're looking to build a team, you're looking to, where do I start? Reach out, have a conversation with these mortgage brokers. These are the ones we recommend here within Fearless, and they've been around for many, many years. They are investors themselves, and that's what we look for when we build that team around us, whether it's our realtor, our mortgage broker, our lawyer, our accountant. Are they real estate investors themselves? Do they understand the strategies we are trying to employ? Do they speak the same language as us? Maybe the accountant we've used for our carpet cleaning business for the last 10 years is not the same accountant we're going to use for our real estate investing. Okay. So we want real estate investing experts on our team. So number one, invest in yourself. Number two, build a team of support. Very, very important keys to success in this business. Number three, and I'm going to jump around here because these are not listed in order of importance. Okay. These are listed in every single one of these points that I'm going to be sharing tonight are equally important to each other. So the third point that I'm going to share, though, is to diversify your portfolio. Now, why is that a key to success? We've heard this many times. This is nothing new, I'm sure, to most of you. But how does this work in the world of real estate? Because it can mean many different things. Somebody can feel as though they're diversifying because they buy single family homes in different neighborhoods in the same city. That could be classified as being diversified. Somebody might diversify by buying different types of properties. So maybe single family, townhouses, and a multifamily in the same neighborhood. They might consider that diversifying their portfolio. Somebody might buy single family homes in the same neighborhood, but employ different strategies. Maybe one is a rent to own. Maybe one is a joint venture. Maybe one is a BRRRR. Maybe one is a long-term buy and hold or a turnkey type property. So maybe the strategy is a way of diversifying. So there's many different ways we can diversify when it comes to real estate investing. So we have to figure out what is best for us. And the point of it all is specific type of neighborhood. And just do that. Well, what happens if a major employer leaves from that neighborhood? What happens if the school shuts down in that neighborhood? Then we're not diversified, right? So I think we get the point here, guys, is start to diversify a little bit, do something here, do something there. Maybe it's a different market. Maybe it's a different neighborhood. Maybe it's a different type of property. Maybe it's a different strategy we're employing. But have a few different options going on at the same time. Because then if one of them turns a little bit sideways, well, we got the other one still performing well. Okay, does that make sense? Throw it in the chat, guys, if you're following me on these 3 points so far. So number one, invest in yourself. Number two, build a team of support. Number three, to diversify your portfolio. I'll just wait a second to make sure that we're getting some comments here in the chat. It's a little quiet tonight, guys. And I know that there's Stanley Cup playoffs on, and we're competing against that. But stay with me here and throw in the chat. What do you think about these three so far? Number four main point that we're going to share is, and this, you may not have really heard this before, but I think that this is a really big key to success. Our number 4 point that we're sharing tonight is raise capital for others. We've seen a lot of people have a lot of success doing this. So here's why. A lot of people get started in real estate investing, and they don't quite know enough yet. They're not the expert on the market. They're not the expert on the property. They're not the expert on the numbers. Maybe they don't have the money to invest themselves just using their own money. So if you're not the expert yet and you don't have the money, where do you start? Sometimes what gets people going is to raise capital for others. So you can use other people, the working partners in a relationship. So those that are buying the property, those that are managing the property, those that are taking care of the property, maybe doing the renovation, whatever the case might be. You can raise capital for those people from others that have the money to invest in real estate. So you're kind of an in-between person that is connecting money to the work. So being that in-between person, are there people maybe in your circles, maybe workmates, schoolmates, whatever the case might be, family members, they're looking to invest somewhere. You're not quite ready to take their money yet, but you can help them place their money in a solid spot. Does that make sense? What do you gain by doing that? Raising capital for others. Well, you gain the expertise of having these conversations with potential money partners. You gain the expertise of working with and raising capital for the working partners. What are they doing? Why are they investing there? They're going to be sharing that information with you. Why is this type of property good? Why are they doing the renovation that way? Why are they buying in that particular neighborhood? Do you think you're going to learn a lot? This all ties in again with point number one. This is investing in yourself. You're educating yourself. If you can become that person that connects money people with working people, raising capital for others is a major key to success for many real estate investors just getting started. Okay, so we've covered investing in yourself, building a team, diversifying, raising capital for others. All very good points, guys, that we've noticed those who are successful have done. Crystal, you say some people are so good at raising capital, it's a skill set. They could also generate income for themselves. I would pay 1 to 3% for funds raised. There you go. There you go. Some of us know people that want to invest somewhere, right? And maybe we're not ready to take their money yet. But could we place it somewhere? Maybe it's even for a short period of time until we are ready and get them earning some money. Can we start making connections? Can we start networking? Can we start getting to know those that are doing projects, get to know those that are wanting to invest their money? You're going to learn so much by raising capital for others. We could do a whole segment on just that, guys. So that's 1, 2, 3, 4, 5. No, 4 we've covered. Okay, number 5. This is another key that we have noticed that not everybody does when it comes to being a successful real estate investor, and that is planning for the long term. Planning for the long term. Now, what does that mean? Well, in real estate investing, for those of you that have been doing it for a while, you probably know that it usually doesn't turn out exactly as planned from the beginning, right? There's something that comes up that costs more money. There's a delay that creeps up because paperwork wasn't done quick enough, or the funding didn't come through on time, or who knows what the situation is. We have delays, we have money calls, we have maybe larger renovations than we counted on. We have so many different things that happen through the whole period of owning an investment property. So even though sometimes we might plan to do a flip, for example, what's our B plan if we can't sell it right away? What's our C plan if we can't sell it even in a short period of time, in 3 to 6 months? What's our C plan? Do we have a B, a C, and a D plan when it comes to our real estate investing? We always have to have other plans if plan A didn't work out, because this is a long-term thing. And the biggest mistake, guys, that we've seen, and let me know in the chat here, guys, have you seen this too from other real estate investors, that they haven't planned for the long term? The biggest mistake that we've seen is they expect everything to work out exactly as planned on time. And if it doesn't, they're hooped. Maybe it takes longer because interest rates rose, because markets dipped, because they hit a downturn, because they can't find a tenant, vacancy rates rise. All of these things can happen over the term of owning an investment property. So we can't plan on everything working out perfectly. Like when we fill out our performance at the very beginning, that's kind of like, if everything works out perfect, this is how it's going to perform. But what if it doesn't? Okay, we have to have a plan B, C, and D. We have to plan for the long term. And Craig, you're touching on my next point here, which is always know your exit plan. Okay, so number one, plan for the long term. But number two, this is a different point altogether. They're tied in. All of these things are tied in, but always know what our exit strategy is going to be. Are we planning to own it for the next 30 years? Are we planning it to pass it on to the next generation? Are we planning to refinance it in 3 years, 5 years, 10 years? Are we planning on maybe selling the property? What are the costs of doing that? Have we figured that out? What are the costs of renovating? What are the tax implications of passing it on to the next generation? Have we planned that with our accountant? What is our exit strategy with these particular properties that we are putting into our portfolio? How long are we going to have them? Do we just leave this up to chance? Well, we shouldn't be. We should plan an exit strategy. And again, what comes along with that is things can change. And it doesn't mean just because we have an exit strategy plan today that we have to stick to it 10 years from now. We can always change that exit strategy, right? But what it does mean is that at least we have a plan. At least we have an idea of what our plan is, and we can communicate that to maybe our partners in the project or others that we're working with, maybe our investors in that project. Andrea, I like your point there too. When you're running your deals, run your numbers super conservatively. Very important key to success. That's not one of my 7 that I have here, but that ties in with educating yourselves. And you know, the more we educate yourself, the more you realize that being conservative in your own numbers, not trying to flub the numbers or fluff them up and make them look better than they are, it never works out when we try to do that. So running our numbers super conservatively, looking for the downside, looking for what could happen, maybe looking and putting in a higher vacancy rate than we're currently having, putting in a higher interest rate than is currently in the market, putting in all of these types of numbers. Now, is everything going to magically work and there's going to be a million of these properties out there? Well, not really. But that's where, again, getting to know a strong team around us to bring those properties to us really helps. All of these points that we're bringing in tonight, guys, tie into one another. Okay, so we have talked about investing in yourself. We're getting through this quick, guys. We talked about building a team of support. We talked about diversifying your portfolio, different markets, different types of properties, different strategies. We talked about raising capital for others, a great strategy. No matter where you are in your investing life, you can raise capital for others. If you're just getting started, maybe you've been around for 20 years. Do you want to raise capital for others and get a piece of a lot of these projects that are going on? What about planning for the long term? Very, very important. And knowing your exit strategy up front and just being aware that that can change as time goes on. What's the last one? The last point that I want to share here, guys, 7 keys to success is you must have a mentor or a coach that has done it. Now, you might say, well, of course he's going to say that because he runs a coaching program. But we've had mentors and coaches the entire time we've been real estate investors. And when we first got started, we joined groups. We paid for groups. We paid for mentorship. We paid for coaches. And I just mentioned this to somebody, I think it was yesterday or the day before, that we totaled it up that we have paid well over $100,000 for this mentorship and this coaching. And we still do that now. We still hire on every single year over the last 6, 7 years. We have hired a coach on some specific aspect of our business. Why do you do that? Because it makes the whole process of moving along so much smoother. When you do hit a roadblock, you can get over it and you can find the answers. So important to have somebody there to get the answers you need when you need them. So you must have a mentor that has done it. And, one of the things that we see now and scrolling through Facebook, there's multiple people that are offering mentorship and coaching, and, it's all over the place. Has that mentor or that coach been through downturns before? Has that mentor or coach owned their investment properties for a long period of time? Have they failed? Do they share their fails with you? What do we learn from the most? We learn from some of the failures that we've made, right? And so is your coach or your mentor readily available to share some of those failures with you? Hopefully they are. And that's very, very important too, because that's where we really grow. That's where we really, really learn. Craig says the coaching is invaluable. So glad we made that choice. So much easier to learn before you're upside down. Absolutely, Craig. You guys have done amazing things since joining our Ignited program. Andrea, keep going to keep growing. That's so true. And you guys have done amazing things. How many stories is that building that you guys are looking to build there, Andrea? Is it like 7-story building now with 72 units or something like that? Would you have thought, Andrea, 4 years ago when you joined Ignited, 11-story building that you would be involved in a project like this, Andrea? I'm curious if that's was your plan 5 years ago. Eric, have they been investing for more than 5 minutes? Exactly. Very, very important. Extremely important. Okay, guys. Andrea, I love it. No. Yeah. You know what? It's funny when we talk to a lot of our Ignited members that have been doing this or maybe been with us for a year, 2 years, 3 years, and now they look back to where they were a few years ago, what they were hoping to accomplish within those few years. And many, 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 many of them have far surpassed where they thought that they were going to get or able to do in this world of real estate investing. So it's super cool to see for us as coaches and mentors as well. Okay, guys, so those are the 7 keys. We're not going to belabor this tonight and run on and on and on. I wanted to share these 7 main points with you. And of course, there's others as well. Andrea mentioned a few. She mentioned, getting to know the numbers, running the numbers properly, being conservative on the numbers. Those are very, very important. But all of these things are the keys that we have seen. So I want you to ask yourself a question. I'm going to run through these one last time. Answer to me how many of these 7 you have done or are planning to do. Okay? And what's your number? Throw it in the chat. If you've done it, give yourself a point. Okay, number 1, invest in yourself, educating yourself on strategies, educating yourself on what your goals are and how you're going to reach them. Investing in yourself. Have you done that? If so, give yourself a point. Build a team of support. Point number 2, have you built a team around you yet? Realtor, mortgage broker, lawyer, accountant. Give yourself a point if you've done that. Number 3, have you diversified your portfolio? Maybe you've invested in different markets. Maybe you've invested in different types of properties. Maybe you've used different strategies. Maybe you've done a combination of those things. Give yourself a point if you've diversified. Raise capital for others. Now think about this one, guys. Not just raising capital for your projects, but raising capital for someone else's project. Have you done that yet? If so, give yourself a point. Next one, planning for the long term. Do you have a plan and do you know how you're going to get there? Do you know what your end goal is in real estate investing? Now, some of us just focus on just get the next one, get the next one, get the next one. But what's the end goal we're trying to reach? And are we buying properties? Are we doing strategies that are helping us to get to that end goal quicker? Have you planned properly for the long term with the steps to get there? Again, we could do a whole training just on that, guys. If you have, good for you. Give yourself a point. Do you know the exit strategy for every one of your investment properties? Do you have it down on paper, or are you kind of just winging it? Kind of just, well, let's see what happens. Do you have it down on paper or down on a document of some sort? Maybe it's not on paper. Do you know what your exit plan or your strategy is? And this ties in with our last one, planning for the long term. Maybe it's a short-term investment, this particular property that you're working with now. Maybe it's a long-term one, but do you have a plan for each one of them? And do you have a mentor that has done it? Okay, somebody who's been around through ups and through downs. Somebody who has failed, made mistakes. Somebody who has owned their own investment properties, their own portfolio, managed their own properties, been through this whole thing of real estate investing. Do you have a mentor? Give yourself a point if you do. I'm curious, guys. How many points did you calculate for yourself? Throw it in the chat if you are brave enough. Obviously, I'm going to brag a little bit and say, hey, yes, I have done all 7 of these points. So that's easy for me to say. But this is something that we can work towards, right? And it always improves. Our team might change, for example. The way we diversify might change. The way we raise capital might change. Our long-term plans might change. Okay, Heather, 1.5. Good for you. You're partly there. You're making headway. Craig and Lisa, 5.5. Definitely haven't raised money for others yet. Okay. Terry and I since 08. Yes, all 7 for us too. Way to go, Eric. Yes. Awesome, guys. So this is a key. Remember, guys, these are 7 keys to success. This is a little bit of a roadmap tonight as to what are the things that I need to do to become a successful real estate investor. So if we are now finding that we have done 1 or 2 or 3 of these things, well, we have 4 more now we can work on. 4 more now that we can look towards, set a goal for, make a plan for. That's what we want to do. Okay. So this is a little bit of a, let's get started. Here's our goals, 7 keys to success. Feel free, guys, this video here stays in our group. You can watch it again if you need to go over these points. If you're watching on YouTube, feel free to watch this again. Make sure, come back 6 months from now and have I actually done these 7 points yet? And if not, what's holding me back from doing that? Get these 7 points done, guys. These are the 7 keys to opening those doors of real estate investing that you are all wanting at the end of the day. We're doing this for a reason, right? We're buying real estate for a reason. There's another key to success, knowing what our why is. We can throw that one in there. There's number 8. We have to know why we're doing this in the first place. Is it just because it's fun? Is it because we're just, we want our friends and family to know that we own more than 1 property? Are we doing this because we're trying to help out a family member in some way? We're trying to get closer to our retirement. Like, what are our whys as to why we're becoming a real estate investor? Make that very clear. There's your point number 8 that we will actually share tonight. Angie, we have actually done all 7. Good for you. Well done. I thought the one that would hold some back from getting all 7 would be the raising capital for others. Because that holds a lot of people back on that one, because it's not that common to do. But good for you. Good for you for doing that. All right, guys, that's our training for tonight. Feel free to look back at this again. And Washington, 4 points. Well done. Well done. Okay, good job. What are the 3 that you haven't done, Washington? And what can you do to move forward and get those? That's kind of the next question then, right? All right, guys. That's our 7 keys to success that we wanted to share here tonight in Fearless. We will see our Ignited members over in our laser session at the top of the hour in about 25 minutes or so. And before we go, I'm just going to quickly share my screen here, guys, and just show you some resources. For those of you that don't know they're available, I want to make sure that you know they're available. Okay, I pressed the wrong button there, but we are back. And this is on our website, guys. So feel free to just go to investorlife.com. Super, super easy. And in our toolkit, there are lots of tools here, guys, for you to use. They're absolutely free. They don't cost anything. You put in your name, your phone number, your email, you immediately have access to these tools. Many of these here, there's tutorials for them as well. They're going to help you move along, learn this business of real estate investing. If you're looking for more education, we have a free real estate course here. Let's get started. Get through that course. What's next? Feel free to reach out to us. If you're looking to invest passively without using your own time, we have options for you. And if you're looking to buy real estate without using your own money, we have options for you. So guys, go to investorlife.com. There's my little plug. If you are looking for more help when it comes to being a real estate investor. All right, guys, have a great evening. Before we close off, Heather, I'm actually super proud that I can say I've started the first 2 steps. Awesome. Well done, Heather. That's great. And I know you are working on some other things. And I'm excited for what is to come for you, Heather. So awesome, guys. Thanks for joining us. Take care. We'll see you next week where we will continue this Money Magnet May. See you next week, guys.